Going over IRS Form 5884, Work Opportunity Credit. This is a fairly straightforward form. It's one page. You see it, the entirety of this form on the screen in front of you. However, there are some points of clarification that we'll need to go through as we proceed through this form. So a couple of background pieces of information. Employers use Form 5884 to claim the Work Opportunity Tax Credit for qualified first and or second year wages paid to or incurred for target group employees during the tax year. So basically we'll get into a little bit more detail about what target group employees are because only certain employees based on certain criteria are able to have their wages considered for the Work Opportunity Credit. Now, employers can claim or elect not to claim the Work Opportunity Credit anytime within the 3 years from the due date of your tax return, either on the original return or an amended return. To claim this tax credit, partnerships, S corporations, co-ops, estates, and trusts must file. However, all other taxpayers are not required to complete or file this form if their only source for this tax credit is as a pass down through from a partnership, S corporation, co-op, estate, or trust. This can simply be reported as a general business credit on IRS Form 3800. So in order to claim the credit, the employer must ask for and be issued a certification for each employed person from the state workforce agency of the state where your business resides. So you must either receive the certification by the day that the individual begins work or complete IRS Form 8850, which is the pre-screening notice and certification request for the Work Opportunity Credit, on or before the day that you offer the person a job and receive the certification. So targeted group employees. There are certain employees that that experience probably higher than usual significant barriers to gainful employment, and that's why these targeted groups exist. So a targeted group employee has to have started working for you before 2026, part of the tax law, and is one of the following: long-term family assistance recipient, qualified recipient of temporary assistance for needy families, a qualified veteran, qualified ex-felon, designated community resident, vocational rehabilitation referral, summer youth employee, food stamps recipient, also known as Supplemental Nutrition Assistance Program or SNAP, Supplemental Security Income recipient, SSI, or a qualified long-term unemployment recipient. If you go to our article, we go into a little bit more detail on the IRS guidelines of what each of these groups means and what a qualified employee from each of those groups, what criteria they must fulfill to be considered a targeted group employee. So now that we've kind of gone through that, qualified wages, there's another explanation of qualified wages in the form instructions. We're going to go straight to the form itself. We're going to enter our taxpayer information for our hero, which is Acme Enterprises. So in line 1, there are different tiers of tax credits that are available to employers based on the qualifications of their employees. So in line 1A, we're targeting the wages for qualified first-year employees that worked at least 120 hours, but fewer than 400 hours, so not considered full-time for the year, you can receive a credit for up to 25% of those qualified wages. In line 1B, first-year employees, for anyone that worked at least 400 hours, you can receive a credit for up to 40% of those qualified wages. And then qualified second-year wages of employees certified as long-term family assistance recipients, and you can take a full credit of up to 50%. And so there are wage limitations depending on the category. For example, there's qualified veterans. There's an available tax credit of anywhere between $6,000 and $24,000 based on their employment status and service connected disability rating from the Department of Veterans Affairs. And there are also certain limitations for summer youth employees and other targeted groups. All of this information is in our article. So if you need clarification, please check that out. I'll give you the information towards the end of this video. So we're going to put in some numbers, and then we're just going to do the calculations and move on over. So we'll just say $10,000 in wages of employees that worked between 120 and 400 hours. That translates to $2,500 of an available possible tax credit. We'll say $10,000, well, we'll call this $100,000 since so 40%, that would be $40,000. And then we'll say $100,000. We'll just make this $100,000 all around so that it's less confusing for everyone. So 25% of the $100,000 is $25,000. 40% of the $100,000 is $40,000. And then 50% of $100,000 is $50,000. Now, I just happen to use $100,000 for each category, but they should be uniquely different categories. So this would represent a total of $300,000 of qualified wages, not the first $100,000 repeated 2 more times. So in line 2, we're going to simply enter the total of all of these, which appears to be $115,000. Now, you have to reduce your deduction for salaries and wages as an employer by this amount. So if you're deducting, say, $1 million in terms of payroll, then you would have to back out this $115,000 because you can't take a work opportunity tax credit and then take a deduction against your taxable income for these same expenses. Now, this is required even if you can't take the full credit this year. If you have to carry a part of it backwards or forwards, you still have to make that adjustment on your deduction side. In line 3, you're going to enter any work opportunity credits that were passed down to you from partnerships, S corporations, co-ops, estates, and trusts. So for partnerships, you would see this reported on Schedule K1 of your Form 1065 in Box 15, Code J. For S corporation shareholders, you would see this when your S corporation issues your K1 on Form 1120S. This would be in Box 13, Code J. For estates and trusts, you would see this on your Schedule K1 of your IRS Form 1041, Box 13, Code F. And then co-ops, if you're a member of a co-op, you should receive a Form 1099-PATR. This is taxable distributions received from co-ops, Box 11. However, for 2019 forms, this would be in Box 9, and before 2019 it would be in box 8. So we'll just say that we've got $10,000 that was passed through from one of those entities. Now, again, if you do not have to calculate up here, and the only data entry that you have in this field is this $10,000 as a pass-through from some other taxable entity, you don't need to complete Form 5884. You can simply take this and report it directly on Form 3800, which is the general business credit, Part 3, Line 4B. So in line 4, we're simply going to add the totals of lines 2 and 3. So any taxpayer that is not a co-op, estate, or trust, you're going to stop here. For partnerships and S corporations, you'll report this amount on Schedule K, following the Schedule K instructions for your respective tax return. For all other taxpayers that are not co-ops, estates, and trusts, then you will stop here and report this on IRS Form 3800 Part 3, Line 4B. So lines 5 and 6 are specifically for cooperatives, estates, and trusts. So in line 5, you have to determine the excess credit that can reduce your tax liability to 0, but if there's any excess, then that must be passed through to either patrons of the co-op or beneficiaries of the estate or trust. If this applies to you, be sure to go back through the form instructions. There's specific references that you might need to pick up on. We've also written fairly intelligently about it in our article. So in line 5, you're going to document the amount that was allocated that was passed down from the co-op down to patrons, or that were distributed to estate or trust beneficiaries. So let's just assume that that amount was $25,000. In line 6, you'll simply subtract line 5 from line 4, and that should be $100,000. For co-ops, estates, and trusts, you have to go through this additional step, and then you can report this amount on IRS Form 3800, Part 3, Line 4B. So, to recap that, cooperatives, estates, and trusts must complete lines 5 and 6. The amount that they report on their IRS Form 3800 as a general business credit will be the number that's on line 6. For all other taxpayers, your reportable number is going to be on line 4. So the IRS website in several places does have different explanations and discussions about the work opportunity credit. However, in our article, we've tried to distill all the relevant information into one easy-to-read article. So that's all we have for this form, but if you need more background information, please be sure to check out our article. Simply go to teachmepersonalfinance.com, type in IRS Form 5884 in the search bar, and our article should pop right up. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, please post them in the comments section. Otherwise, have a great day. Thank you.